All right, guys, let me provide you a quick walk through my application that helps investors find interesting stocks tailored to their risk appetite and build an efficient investment portfolio based on the Markowitz model. The efficient investment portfolio is the portfolio that has a minimum possible loss under your given required return. So this portfolio is allocating stock weights in such a way as to minimize that possible risk given your expected or desired return. And now we're gonna see how this thing works. Actually, this app consists of two parts: stock screener, portfolio builder, and fundamental analyzer. So we're gonna see how you can analyze shares also and pick the best stock among closest peers and choose stocks tailored to your risk appetite. So first, you choose your risk level. Low risk level, it means you are a risk averse investor, someone who is avoiding risk, wants minimum risk. And risk seeking investor is someone who wants higher risk and higher return. So let's say we are low risk investors. Let's say we want let's say 44% yearly return from our investments. This exchange, you can leave the field blank, and also the country. If you leave it blank, it will show you stocks by default. Those stocks will be listed on US exchanges, but the emitter company may be from another country. But okay, we'll leave these fields blank. And then you press the screen stocks button, and it starts filtering stocks to find you stocks tailored to your low risk appetite. And we see different shares here. The beta means that the company is less volatile, less risky than the market. For example, if the beta is 2, it means that the stock is 2 times more volatile than the market. When I say market, I mean S&P 500. But in this case, these stocks are less volatile. Again, this beta is calculated based on the trading history. It doesn't mean that in the future the stock will be of same volatility. Maybe it will be riskier. That's why you should regularly check this controller and relocate your portfolios, rebalance your portfolio if some stocks become more riskier. Then the volume, the exchange, and the country. As you can see, this is a Chinese company, but it's listed on the US exchange. So you see different companies, international companies. You are gonna have international portfolio. That's even better. And you see different risks appetite. As you can see, beta is less than 1, meaning that the stocks are less volatile than the market. This negative beta means that the stock is moving in another direction with the market. So for example, when the market is falling, this stock tends to rise. So you should choose the stock when when you're expecting the market to fall. I mean the S&P 500. There are different stocks that you can choose from, and what we can do, let's say you want to buy some 8 shares. Let's choose 1, 2, 3, 4, 5. Let's take AT, 6, 7, Verizon, and let's take one more. Let's say Walmart. We're gonna trade Walmart. We're gonna buy Walmart in our portfolio. And once you select more than 5 shares, you have this button, build the Markowitz portfolio. You hit that button. You just need to wait. It is building your efficient portfolio, and here you go. The app says that if you allocate your selected stocks in this weights, you get this target return of 44% under 18% yearly loss. So this is your minimized loss, minimum possible loss for your given portfolio. And let's see, 58% it is offering to allocate in this share. In Walmart, it is suggesting 40% allocation. And now you see this minus sign. That means a short sale. It means you can short sale the Comcast shares, 20% allocated to the short sale, 80% Verizon allocated to short sale. Long Baba means you're buying Alibaba shares. And if you buy exactly your stocks exactly in this proportion and these shares you sell short, so you get 44% expected yearly return and under your expected risk, minimized risk of 18%. But again, this is based on historical observations, and there is no guarantee that in the future stock fluctuations will be repeated. That's why you should regularly check and regularly rebalance your portfolio. This was based on the Markowitz model. There are different very difficult, I should say, calculations behind the hood, so to say. So the portfolio is choosing stock returns for 1 year, then it is building the variance covariance matrix, then it is calculating portfolios risk using the variance covariance matrix, and then using asset weights it is calculating the target return, your desired return with your weights, and finally you get your minimized loss under your expected return. So this was calculated using the Markowitz model. You can use it. Also, if you want, you can individually click on any ticker and it will provide you fundamental analysis for that stock. For example, Alibaba company, you can see the earnings. So if the company is posting earnings worse than analysts expected for the 3 or more quarters, this is a negative sign usually. There are high probability that for the next reporting season, the company would show worse earnings, worse than analysts expected. So in case of Alibaba, it only has one beat, which is a worrying sign. Then you can see insider trading, no data available for this share, but you can see analyst price target. If you see the huge range between minimum and maximum price target, then the stock may be more volatile in the future because analysts are not sure. In this case, 83 analysts were calculating. The average price target is 159. You can see the closest peers of Alibaba company. Then you can also see the revenue segmentation. If the company relies heavily on one revenue stream, this is a bad sign. This is bad diversification. And you should generally see a lot of income sources over here. You can read recent news and key metrics. This is very important. I will place the article that explains under this video. I will place the article that explains how to compare key metrics and financial ratios to the competitors to pick the best share among closest peers. So these ratios are very important. You should read the article, and we see that there may be a better company with a higher return on assets, return on equity, return on invested capital than Alibaba shares. So you should investigate. You should click this one by one until the point you find the stock that looks better with the higher returns, with the higher gross profit margin, with the lower PEG ratio, and so forth. Again, I have the detailed description on how to compare using these ratios, how to compare companies to pick the best company among closest peers. And you can also see the financial statements growth to see how the company was performing in the past, what it was showing in 2025, 2024, and so forth. You can see the DCF risk level, the stop loss and take profit. These are short-term figures. So for example, if you buy at the current price, your stop loss can be at 142 and take profit at 179. This is based on the volatility. I simply add 3 volatilities to the take profit from the current price and subtract 2 volatilities to get the stop loss. Nothing very difficult in these calculations, but still this controller shows you useful information. And the DCF fair value, this target price was calculated based on the DCF. It is 3012, and this target price is just a average among analysts. Analysts may use the DCF, the DM model, or price income model, or 3 or 2 models at the same time, and then extract averages. And these are 83 different analysts, and the average price target is 159. You can see the difference here is huge, but we can take another company as an example. You can approach the screen from here. Just click on individual ticker. Once you have your list of stocks, you can click on individual ticker to get this data. Or another way how you can access this screener, fundamental screener, I mean the one that we saw previously, not the stock screener and portfolio builder, but fundamental screener. You can just click on individual share and it will show you the analysis, like here you see. Or another way, you can just hit this button at the top, fundamentals, and it will open you the separate screen with a fundamental explorer. You can type the stock ticker here, for example, NVIDIA, hit the analyze button, and it will show you fundamentals for NVIDIA. As you can see, it beats EPS and revenue for the 3 past quarters. This is a good sign. But you see higher insider trades. That means that the company insiders, someone who's working in the company, were actively selling the share. This was a little bit worrying sign, but still, if you see the growing trend, you should carefully read the news. You should see financials, maybe some company announcement. There should be a reason why the insiders are selling. But basically, buying is a good sign. Inversely, buying would be a good sign. You can see the big spread between minimum and maximum price target assigned by different analysts. There was a 272 analysts participating in it. If you see the high range difference between maximum and minimum price, that means that the stock price can be very, very volatile in the future, because analysts cannot have one very similar assumption. Of course, they all have different assumptions, but when you see such a huge difference in the target prices, that means that the analysts are having very big spreads, very big visions about the future of the stock price, and it means that the company may go volatile, very volatile in the future. Again, you can see the price to earnings valuation. It is trading, the sector is 58, the company is 42. It means almost fairly valued. Below the sector average, potential undervaluation, but it's close to sector average. That's why it is our most fairly valued based on this ratio. But not compare it just on one ratio. Again, you have the price target here. The average is 439. The current price is 172. Means that the stock is undervalued based on analyst consensus assumption. And here you have a peer comparison. You can compare peers and choose the stock that looks better, with a high growth potential, with a low insider sales, with a good earnings per share. Here the company should beat in the 3 past quarters. You should have a strong key metrics and financial ratios. Again, I'll place the link to my article explaining how to compare these key metrics and financial ratios. You should see great revenue segmentation divided among different revenue sources, revenue streams. Again, you can see how the company performed through different years. In case of NVIDIA, it's a very strong company. You see operating income skyrocketed by 680% in 2024, revenue skyrocketed by 125%, net income by 500%, free cash flow by 600%. This is very important, because the higher the free cash flow, the higher the potential stock target price would be, because the free cash flow is used directly in the DCF model, discounted cash flow model. Again, you see through the years, NVIDIA showed great growth in the free cash flow. Again, here we have a slight decline in the 2023, but again, the operating profit declined, earnings per share declined, but again, in the next year, 2024, it showed 680% growth in operating income and 600% in free cash flow. That means that the company is very strong and its products are in a high demand right now. So you see the DCF fair value is 125 based on DCF, and the current price is 182, means that the stock is overvalued at the moment. It's trading slightly higher, 30% higher than it should be based on the DCF valuation, but still the company looks very strong fundamentally. See this amazing return on assets, high return on equity, 103, much higher than the closest peers. You can check it out, see the closest peers. Return on investment capital is amazing, 69. I don't think that some of the peers have a higher return on invested capital. Again, read the article that explains how to analyze using the key metrics and pick the best share. I'll place the link to the article under the description of this video. And again, you can see the stop loss 162 and suggested take profit is 181. So this is very useful controller for you to pick the best stock and see what's happening inside the company and analyze the share, and also use the stock screener together with fundamentals to pick truly amazing shares. Thank you for watching my demo video.